Hello, it's Mark Albert. I really appreciate you being with me today. Today is April the 11th, 2019. And this is the day that the Ontario government, the provincial government of Ontario, released their annual budget. This is the first budget for the Ford government, and it's going to be for fiscal year 2019-2020. Now, I'm going to share some things just from my vantage point, and I'm nonpartisan here. It's just my perspective, things I've observed, things I think are important. And I'm going to hit on some numbers that you're going to be like, I didn't know that. And thanks for telling me that. So those are the type of numbers that I'm going to give you, and hopefully it makes sense. I'm going to explain a little bit of terminology, but we're going to get into this. Hopefully you appreciate this. This is not meant to be a political, this party versus that party. And I do know that there are some people who, leading up to this budget, weren't happy, but I also know that some of the things that the media were saying in terms of what we anticipate in terms of the cuts, everyone thought that it was going to be pretty severe, but it actually wasn't. So let's get into this. So one of the big things that the provincial government wants to do is they want to tackle the budget deficit, and they want to tackle the growing debt problem that the province of Ontario has. And so in their election platform, and then again now, the big thing is the budget, the first budget, it would show the path to balance. The path to balance. So the path to balance is 5 years. So they're going to take 5 years, of course. They're in for a 4-year term. So to get the full balance, they got to get reelected. So political parties do that. Not a big deal. That's just stuff that happens. That's just how the numbers are. So path to balance is five years. So, you may not know this, but the debt of the province of Ontario, the net debt is $346 billion. $346 billion. That's a lot of money. Like, if you write that many zeros, like, that's a big number. That's a lot of money. So, this background information as to why we gotta tackle the budget deficit and the growing debt problem. So, the debt-to-GDP ratio is 40.4%. I'm going to explain what this means, because a lot of people, they go, what are you talking about? I don't even know what that means. Well, I'm going to explain it. So they have a debt-to-GDP ratio of 40.4%, and they're facing economic slowdown time in terms of the projections within the economy. Globally, there's a bit of a slowdown, but also in Canada as well, compared to in most recent years. So the debt to GDP ratio really is the ratio of a country's debt in compared to their gross domestic product or GDP. And I'm going to explain what GDP means, okay? So it's just a little math equation, all right? It tells us something about the debt situation and your ability to manage the debt under your debt load. So if we look at GDP in essence is you're measuring the value of the total economic activity within, in our case, the province of Ontario, all right? So technically speaking, GDP is the sum of the market values or prices of all final goods and services produced in an economy within a period of time. So, simplistically speaking, GDP is the total economic activity that produces final goods, final services that are produced within that economy. So basically the overall economy, what it does, what it brings forward, the dollar value of that is your GDP. So the debt to GDP ratio is calculated this way. You've got the total debt of Ontario, which is $346 billion, divided by the total GDP that the province of Ontario produces within the economy. That number is well over $800 billion. I don't have the exact number, but we do know what the ratio is. The ratio is 40.4%. So that's your calculation. Now, what you'll hear with the federal government, what they say about the federal debt to GDP ratio is they say, oh, we're better than all the other G7 nations, right? Oh, okay. Okay. So you compare yourself to another country. Okay. Another country that's in a worse situation than you makes you look good. Oh, okay. So I don't buy that. And I'm going to explain why. And you want to understand this if you want to know the impact of this debt. So this chart I got from Statistics Canada and the Ontario Ministry of Finance. Okay, so it's a chart I got there, and it shows the net debt to GDP ratio for the province of Ontario. All right, now you might not be able to see the numbers, so I'm going to explain what's important here. So it's based on the fiscal year, so 2018 to 2019. So right up here at its peak, we got the debt to GDP ratio for Ontario currently sits at 40.4%. All right, so if we go all the way over here to 1990 to 1991, that fiscal year, that's the other side of this chart when they start tracking it, debt to GDP ratio was 13%, 13.4%. So in that period of time, it grew pretty significantly. Now, the prior government, the provincial Liberals, they were in power for about 15 years. So we go back about 15 years on this chart, and the debt to GDP ratio is around 27%. So what happened was, see how the chart goes up? So spending, it was high spending, growing of debt, up to 32%, 34, 36, 38, 39, 40, 40, all the way to 40.4. So debt grew. Of course, the economy grew, the GDP grew, but the ratio kept going up. All right? So this is a problem. And so that's why this particular government, we got to get to balance. We got to get on top of the debt situation. So you think about it. If I have a debt situation and I overspend, or if you overspend, you can only go that for some time. Look at Greece 10 years ago. Their debt to GDP ratio out of control, terrible. They're in crisis. Are we going to go bankrupt? What's the deal here? So the Minister of Finance for the province of Ontario, he said concerning the interest on the debt, on the debt for the province of Ontario, he said this, and this is on the public record. He said, "We will pay $12.5 billion of interest this fiscal year." Do you know what that means? That means that in the next 12 months, the province of Ontario is going to pay about $1 billion a month just to service the debt, just to pay the interest on the debt. Not one penny to pay down the debt. Did you get it? So it's to service the debt. So if, let's say the government keeps overspending year after year and the debt doubles with the current interest rate that they're paying, then it's like $2 billion a year to service the debt. What I meant to say was $2 billion a month to service the debt, right? So that's just crazy. So we got to get on top of it, and this out of control spending in my personal life or in your personal life would be a problem. No one family can overspend month after month, year after year without eventually getting to a crisis point. If you had a business, if you were in business and you overspend month after month, year after year over time, you get a crisis point. You're out of business, right? So, but the finance minister, he also said that the prior, and this is on record as well, he says that the previous government was spending $40 million a day more than they brought in. Can you imagine that? 15 years in power, you're spending $40 million more a day than the taxation, all the income that you get. And so that's why the debt ballooned, right? So we can't do that. Now, we talk about debt to GDP ratio. We're at 40.4% for Ontario, right? Japan, they're in 2017, their debt to GDP ratio was, listen to this, 236%. That's crazy. They're just stockpiled in debt. And then the United States, in 2017, their debt to GDP ratio was 108%. So, and they're like stockpiling it. They're trillions upon trillions. So you can't compare. You can't say if you're the federal government or the provincial government in Canada or in Ontario, you can't compare yourself to a company, to another nation that's stockpiled in debt and say, oh, look at us, we're the best of the seven. Well, does that necessarily mean that that's good to have a 40.4% GDP? What happens if the economy tanks and our GDP drops significantly? What happens if interest rates go up? All those things will hurt that. And the problem is, 20 years from now, 30 years from now, you want to retire, 40 years you're in retirement, and if the debt, where's the government going to get money? They're going to tax us. So if you think that taxes are high now, you wait if the government continues to spend out of control. So very interesting stuff. So what we should expect is spending restraints and cuts from the government. It was very mild on this first budget, but if they do that over time, you're going to find tax relief coming in the upcoming years. So if the government does that, we'll be fine. What I like, they got free dental care for low-income seniors. So if you're a senior, 65 or older, you make $19,300 a year, free dental. If you're a couple that makes $32,300, free dental care, which is great. Another thing, the GTA, they plan to build infrastructure on the transit system. So billions are going to go towards that. And then billions more are needed. Of course, that's coming from the City of Toronto and the federal government to make this happen. And I think that this might be a problem because the city might say, we don't want it that way. We don't want to pay. Federal might say, we don't want to pay that much. So that's how things happen. Childcare Tax Credit. This is a great thing. So basically, it's a sliding scale. So if you make up to $150,000, you can participate. Low-income people are going to benefit the most. So if you make less than $20,000 a year, which is pretty low, you'll receive $6,000 per child that's under the age of 7. So if your child is between 7 and 16, then you're looking at up to $3,750. So if your child has severe disability, then you're looking up to $8,250. Good stuff. So a lot of these topics, I'm going to have links down below so you can look further if you want. And the business tax credit, which is a good deal. There's a tax credit, and what they want to do here is so companies can write off capital expenses right away. And the goal here is to encourage companies to spend money rather than to hang on to their profits, and that'll help. Listen, really appreciate you being with me. I trust that this is a very good use of your time. Help you think it through. Comment below. I know there's people who agree, disagree. That's fine. Have yourself a great day. We'll talk to you later. Bye now.